Howdy who, all my stock market gamblers. Welcome today. I'm Tall Mike. It's April 30th, the last trading day of April. Now we got May coming up. May is I want you to be careful. There's an old saying, sell in May and go away. We're entering the weak part of the year. Okay, the 6 months between May through October 30th, May 1st through October 30th, that's the weaker time of the year, and at some point we're going to get that big correction, and just use caution. I'm not saying to short the market here. The Dow is down about 100 points today. NASDAQ's flat. Now, what I want to talk today about is the massive price distortion in the housing market. Okay, now I'm a real estate broker. Many of you know that. That's what I do for a day job. I sell houses, and I have trouble explaining to people what's going on in the housing market. What people see is they see 30 million people out of work, and they see the housing market just going like a rocket ship to the moon. Why? Why is it going like a rocket ship to the moon? Look at where I live, 1,300 square foot homes, 1,300 square feet. They're selling for about $2 million. They're getting 20 offers the very first day they go on the market. How is this possible? How is this possible? Where does the money come from? Okay, so what's going on? First of all, I want to let you know that the housing market is massively distorted right now. It's not real. It's not real. Okay, so how did this happen? Let's think about it. All right, so at the beginning of 2020, before the pandemic, interest rates were what I would call extremely low. They were around 3.7% for the 30-year fixed loan. Okay, that was extremely cheap. Now, why so cheap? Well, because the Fed, they bought one out of every three mortgages they own. They spent over $2 trillion to buy all these mortgages. Okay, so what does that do? The mortgage market, it keeps rates low. So we were at 3.7% on the 30-year fixed rate loan. Well, then the pandemic hit. Okay, so what happened during the pandemic? Well, they lowered it from 3.7 down to 2.7. What does this do to demand? Well, it means you can buy more house. So everybody wants to buy more house. Now, I sell luxury homes in the area, and a lot of my clients, they actually are buying second homes. Now, I live in Silicon Valley, but where they're buying their second home is actually over in Santa Cruz. Santa Cruz is the nearest beach to us, and they're buying beachfront properties for millions and millions of dollars. Now, why? Well, because money's cheap, and they think that the Fed's going to keep printing the money to inflate, so they think the houses will go up. So the Fed, by buying over $2 trillion of mortgages, have decreased the interest rate that you can buy a home with. Okay, so people are buying vacation homes. Now they'll Airbnb those out, and they'll, maybe they turn a profit on them. I'm not sure exactly what they're going to do with them, but they're buying very expensive vacation homes. People are buying the second home because the Fed has the interest rates artificially low. Now, at the beginning of this year, we were at 2.7, and we actually went up above 3. But no. Fed has lowered it down again. We're below 3% on the 30-year fix. They just do not want to let the housing market drop. Why? Why can't they let the housing market come down? Why can't they let rates normalize? Well, if they do that, housing is in a bubble. A lot of people don't believe that. Well, it's a lot higher than when we had the great financial crisis, and that was a bubble, and we're way above that now. So we're still in this bubble. The bubble has never really broke because the Fed keeps blowing the hot air into the bubble with these artificially low interest rates. Now, they cannot let it drop, because if they let this drop, the real estate bubble, that pops. You know what else is going to pop? Well, the stock market bubble is going to pop, and then you're going to get the bond market is going to pop. All three of them are in huge bubbles. Never happened before in the history of the world, where all three at the same time are in a massive bubble. And this massive bubble is Well, it's arranged by the Federal Reserve, by Jerome Powell. Now, I just get so disgusted when Jerome Powell comes out and says there's no asset bubbles. Jerome, there's three, and they are all happening at the same time, and everything's in a bubble right now. But okay, so you got these really artificially low interest rates going on right now, right? So that's keeping the housing market artificially propped up. Now, at any time, they can take away the punch bowl, but during the pandemic, they started buying another 40 to 80 billion dollars of these mortgages every month. Now, if the market, we're supposed to be in this great recovery. If we're in this great recovery, why do they need to buy 80 billion dollars of mortgages every month? Because no one else will loan money at these rates. Now, look at here's what else they're doing. Okay, so the federal government says you don't have to pay your mortgage now. Forbearance. Okay, so if you don't have to pay your mortgage, well, doesn't everybody want a house? Right now, home ownership is, well, it's a little above 65%. 65% of U.S. citizens, they're homeowners. Okay, they're not renters. The other 35% are renters. Okay, and of course we have the homeless problem. I mean, why is the homeless problem keep increasing? They keep sending free money out, stimulus checks, extra unemployment. Why is the homeless problem just going up like a rocket ship as quick as houses are going up? As long as houses continue to get artificially, they're not real. There's no price discovery. Nobody knows what the price of a home should actually be. I'll tell you what. If the government stopped buying mortgages like today, if they just said we're not going to buy mortgages anymore, they already own $2.2 trillion. But they say they're not going to buy any more mortgages. And what they said, they're actually going to sell the mortgages they have. And what they said, well, you got to start paying your mortgage. We're going to take away forbearance. We're going to take away the eviction moratorium. What do you think would happen to the housing market? Well, we don't really know for sure, but I'm pretty sure it will come down over 50% because we are artificially inflated up here. These aren't real prices. There's no way a 1,300 square foot tract home should sell for over $2 million. No way. It shouldn't happen. We are in a massive price distortion. Nobody knows what the price should be because we don't have price discovery, because we don't have a free market. Now, there's a lot of things the government can do. Hey, if houses start to drop, they can do 1% loans. 1% loans. Would you buy more houses if you could get a loan for 1%? I think people will. Now corporations, they already get that 1% money, and they buy a lot of houses with it. They do. These hedge funds, they go out and they buy, 1,000 homes at a time. This is putting that upward pressure on this. Now, what happens with this upward pressure when home prices go up? Rent prices go up. When rent prices go up, the homeless rate goes up. It's a vicious cycle, but it's not real. It's not real. The Federal Reserve is destroying us. They're destroying us. Okay. Now, what does Biden want to do? Well, he sees this fire raging in the housing market. He says, hey, let's go out and get some gasoline and pour it on the fire. He wants to give first-time home buyers $25,000 for their down payment. He wants the poor people to go buy a house. Well, the poor people can't afford the houses because they're so high up, even with the $25,000 down payment. But he's going to take that gasoline and throw it on the fire. Now, personally, a lot of you are going to get upset with this. I don't think poor people should buy houses. If you can't save $25,000 for a down payment, I don't think you should be buying a house. Houses, you got high bills, you got property taxes. Your property taxes are going up as the houses inflate. Guess what inflates with it? Your property taxes. You have to pay more money in property taxes. I mean, house prices are going to continue to go up until they take away the forbearance, until they take away the eviction moratorium, until they... let interest rates go to the free market. You stop buying all the mortgages. Sell the ones you got. Let's see where there is price discovery. Let's see what the free market is for a house. My nephew just bought a house up that little south of Seattle in Gig Harbor. Bought a house. He's so excited because he paid $600 and he could sell it for $800,000. Less than 1 year later, $200,000 he made. Why should he work? He doesn't make $200,000 working. Doesn't even make $100,000. Makes about $100,000. His wife makes about the same, and they bought this house. All right, they're so excited because it went up $200,000. But it's not real. It's real. I mean, he could sell it to the next idiot that comes and buys it up at these inflated prices. But there is no price discovery. We need to bring price discovery back to the housing market. And when we do, we're going to see a 50% drop. Now, will that happen this year? You know, with Biden, I'm not sure we're ever going to have to pay our mortgage again. I'm not sure we're ever going to have to pay our rent again. Biden's not going to make people pay rent. He's not going to make people pay their mortgage. He's a socialist as far as I can tell. Do you know in the first 100 days, he's already proposed $6 trillion of stimulus and infrastructure packages. Really? It's incredible what he's doing. It really is. You know, college is going to be free for everybody now. You know, child care is going to be free for everybody. Do you know you can take a 3-month paid vacation every year, free, paid for by the government? This is his plan. If this isn't socialism, I don't know what it is, because he doesn't have the money to pay for all that. Where's he going to get the money? He's going to take it from other people. He's going to take it, he says, the rich people, but I don't think so. The rich don't have that much money. So he's going to print the money. Now, who pays for all that? Who gets hurt the most? Poor people get hurt the most when you print that much money. But he's going to give all this stuff away for free, makes him really popular as the president. Popular until this blows up, then he ain't gonna be so popular. But yeah, he's popular right now. Hey, send more money, send some. I think he's gonna do it. I think he's gonna go UBI, Universal Basic Income. I guess that'll start somewhere between September and December. It's just a guess. Biden loves to give the free stuff away. He's like our grandpa. Hey, here's some presents for you. Go to the store. Here's some money. Go buy some candy. Yeah, what? Is this the America that I grew up in? It really, I don't even recognize it. It is fun to watch, though. It's fun to watch. So that's all I really got today. But hey, May. First day of trading in May is Monday. Be cautious. Be careful. Stock market's going to come in. It's overinflated here. We're going to get a correction eventually. I am not saying to short it. Do not bet against that upward trend. Do not bet against the Fed printing money. But on Monday, it's the first trading day of May. And just be cautious. I'm Tall Mike. I hope you all have a great weekend. If you found this helpful, give me a thumbs up. Why not? It's Friday. It's a good day to give me that thumbs up. Helps my algorithms, makes more people watch. If you really like this, punch that subscribe button. Why not? Friday's a good day to subscribe. Anyways, I'm Tall Mike. Get out there. Have a great weekend. We'll talk again next week. Bye-bye now.